We'll start with that. So we have two types of market in India, right? Primary market and secondary market. Okay. So primary market, any idea about primary market? What is that?
Like first time when the company is going IPO.
Right.
Like first time.
So whenever a company needs money, right? They may need to expand their business, or they may need to clear their debt, or for any purpose. If they need that money, then they will come up with an IPO. Okay. So that's all will happen in primary market. So as you know that there are certain IPOs which are currently on, right? HDB Financial Services, Kalpataru, and so many are there, right? So right now they are in primary market. So once they get listed, then they will be listed in secondary market, right? So in primary market there is a limit to every stock, right? Some stocks may have a limit of 15,000.
Yes.
Like it happens in lot size, right? And some IPOs will be SME, small and medium enterprises. So they may have a higher lot size, maybe as well, right? So this is how they will plan in primary market to, because they need some kind of money to expand their business or something like that, right? So once they get listed, they will list in secondary market, and once they list in secondary market, at that time we don't need to buy in lots and all, right? We can buy as per our requirements, or whatever money we have, based on that we can buy in secondary market, right? So this is the basic concept of primary and secondary market. Okay. And then we have exchanges, right? So we have two exchanges, NSE and BSE. So this right?
Yes, sir.
So you can trade whether in BSE or NSE. It's up to you. There's not much difference in that. Only sometimes there will be a difference of 0.5 paisa or 1 rupee, something like that. Right? But anyway, it depends on you which exchange you want to trade. I normally trade in NSE. I use NSE for trading. Okay. And then Demat account you already know. And so you know about the prices: open price, high price, low price, and close price.
In that candle, uncle, that open, shadow, and then big, those one.
Yeah, there are four prices actually. On each candle, there will be four prices: open price, high price, low price, and close price. Whether the candle is of 1 minute, 5 minutes, or 10 minutes, whatever it is, the four prices will always be there. Okay. And apart from that, there is a thing called volume. Okay. So, any idea about what is the volume?
Not that much, uncle. The number of transactions which has been taken place.
Because see, we have in market there are two types of traders, right? Buyers and sellers. So the volume is a mix of both buyers and sellers. We cannot segregate whether they are the buyers or the sellers from the volume. But if we see the candle, then we can take a bet whether they are buyers or sellers. If the candle is green, right, then we can see that mostly are the buyers. And if the candle is red, then we can see that most of the traders are sellers, right? Based on the candle, we can decide which is a buyer and which is a seller. Okay. And then we have bid and offer. Any idea about bid and offer?
When the seller he's selling, when in case if this is stock, when I'm selling a stock, so I'll put a particular price so that which I'm bidding for.
So bid is basically a price at which buyers are interested to buy, and offer is the price at which the sellers are interested to sell, right? So these things, I'll show you where you can see this. One second. If you go to NSE India, have you seen this site earlier? NSEindia.com. NSEindia.com.
Yes, I'm correct.
So here, let's say I want to see the bid and offer for HDFC Bank. Okay, I'll click on that, and then here I can see this is called order book. Okay, so this is order book, right? So here you can see the bid and ask. Earlier they used to call it offer, now they are calling it as ask. Okay, so they've changed the name ask. So this is a bid, this is the ask. So this is the price at which buyers are interested to buy, and this is the price at which sellers are interested to sell. Okay. So whenever there is a match in the prices, at that time the trade will happen. Okay. And these are the quantities here, you can see the trade. And these are the total number of buying and selling quantities.
So like what are these, uncle? These are any particular indexes or stocks?
This is a stock, HDFC Bank.
Yes, yes.
HDFC Bank Limited.
Okay, okay.
So for any stock, if you want to see, you can just write the name of the stock here and then you can see it. And even in Zerodha also you can see this, like in your Demat account. If you add the name of the stock in the watch list, you can go to market depth, and there you can see that this information. Okay. Let's see. Is the video recorded, right? Recording now?
Yes, yes, sir.
Okay, so this is clear, the difference between bid and ask.
Yes, yes, sir.
Okay, so apart from that, there are certain trade information also which is available here. Okay, the total number of traded volume, which is in lakhs, the traded value, total market cap, and the free float market cap. So, do you have any idea about what is the difference between market cap and free float market cap?
No, uncle, I don't have.
Total market cap means total number of stocks, total number of equity shares. Okay. And the one free float market cap means the one which are there in the market. Like let's say they have a total stake of 100%, right? So let's say they have sent 90% to the market. So 90% we as a public can buy and sell, and 10% will remain with the promoters.
Between shareholders and etc.
Promoters or the board of directors or the management, right? So they will have that 10% and remaining 90% will be there in the markets, so that normal public or normal traders like us can buy and sell. So this is called as free market cap. Okay. And then we have 52-week high and 52-week low. So these two prices are very important in stock market. 52-week high and 52-week low. 52-week high means 1 year high, because in 1 year there are 52 weeks. So 52-week high means 1 year high, and 52-week low means 1 year low. Okay, fine. So here,
Just 1 minute after now.
okay.
Yes, uncle.
Okay, 1 second, let me put my laptop on charger. Okay, so 52-week high and 52-week low, these prices are very important. So these I will explain you while we will discuss about the strategies later, right? How to use these. Okay. And then we have upper band and lower band, means the stock can go maximum to this price in a single day, and there is a price at which it can go towards the downside in a single day. So this is a band they have decided. So for some stocks, the band will be plus or minus 5. For some stocks, it will be 10 plus minus 10%, and for some stocks, it can be plus minus 20%. And the stocks which are B grade stocks or C grade stocks, for them the band will be like plus minus 2%. So band means the maximum price it can move and towards the upside, or the maximum price it can move towards the downside. Right? Okay, it's clear.
Yes, sir. Yeah.
So tick size means the stock can move in a multiple of 10 paisa. Like if the price is 2000, then it can go to 2000, 0.1, 0.2, 0.3, like that. It will not go like 0.05 or 0.15 or 0.25, like that. It will not go. It will move like 0.1, 0.2, 0.3, 0.4 like that. Okay, so that means tick size. Okay, fine, this clear?
Yes, sir.
Okay, move back to slides. So next is we have two types of market: bull market and bear market. Actually, three types of market: bull market, bear market, and sideways market. So, do you have any idea about these three types of market: bull, bear, and sideways?
Like, so on sideways, I'm not sure, uncle. Whale market is also called as. Is it also called as whale market, uncle? Because like bull market means it has high potential, bear market means it has less potential, and whale market means it goes sideways. The price goes sideways, neither up or neither down.
Yes, the bull market basically means uptrend, bear market means downtrend, and sideways means flat consolidation, right?
Yes,
So in sideways, any stock or market can form a range, and it will start moving in that range. So there is no fixed time period for what time the market can go in sideways. But these days, for around 3-4 years, we are seeing that 6 months is normally a bull market. Okay, the period is 6 months is the bull market. 3 months is the bear market, and 3 months is the sideways market. This is what we are seeing for around 3-4 years. But if you go back way back in 2008 or 2007, at that time the bull market used to be only for 2 to 3 months earlier. But now it is approximately 6 months.
Okay.
Okay. So this is fine. Why we want to invest? Because we want to start with small fund, high liquidity. We should always trade in high liquidity. So which type of stocks you are trading?
Only small cap stocks in this one, uncle. Small cap stocks and large cap stocks.
Small cap and
Large cap.
large cap. Okay, fine. So if you have experience, you can choose even a small cap and mid cap stock also. It is up to you. But the one which is a beginner person in trading, he should start using with only the large cap and mid cap only. Small cap we should not touch because they are highly volatile. Risky, highly volatile, right? If a bear market starts, they can go up to minus 60% also. So they are very volatile and risky. Any idea about FPO? FPO?
No, uncle. No.
Follow on public offering, right? So this is being done by those companies which are already listed in secondary market. Okay. Like IPO is for the companies which are not listed in secondary market, right? FPO is for those companies which are already listed in secondary markets. Okay. So how it is different from IPO? So it is different from IPO, which is when a company offers its shares to the public for the first time. Then we call it as a follow-on public offering. Okay. Okay. So now instruments to trade. So any idea about how many instruments we have to trade in Indian stock market? So these are the ones. In stocks we have, I've just listed few of them like HDFC Bank, TCS, Reliance, SBI. And in index we have Bank Nifty and Nifty 50 which are highly liquid. Apart from that we have other indexes also like Sensex, right? And then mid cap and then Fin Nifty. Okay. But these are the two which are highly liquid, right? And then we have currency like Forex. We have three pairs, the GBP versus INR, JPY versus INR, and USD versus INR. So here also you can trade, but these are traded only in FN, future options. Okay. Then we have commodity like gold, silver, crude oil, natural gas. Right. These are the commodity which you can trade, but this is again available in FN, future options, right? And then we have ETFs like gold, silver, bank based. ETF. Any idea about what is the ETF?
I know, uncle. Like exchange traded fund.
Yes. So if you want to invest in Nifty 50, Bank Nifty, or gold or silver, then you can go through ETF to invest, right? And then we have mutual funds. So any idea of what is a mutual fund?
Yes, and like example like Parak Parak Mutual Fund, Axis Bank, and then Quant a quant large cap and quant mid cap, those no mutual fund.
So any idea how they work?
There's a fund manager where we can do a lump sum and also an SIP or do an SWP. He's the one who takes care, and there's something called expense ratio, and it will be somewhere up between 2%, less than 2% or 0.5%.
So see, mutual funds are having more expense ratio as compared to ETF. So if you want to invest, then it's better to go through ETF. Mutual fund will be having more expense ratio like 1 to 2%, and ETF will be having like 0.1 or 0.2 like that. So they have a very less of expense ratio here. So if you have an option, you can go through ETF route like gold, silver, bank bean, Nifty bean. It's better to go in ETF. And if you want to invest in any other mutual fund like large cap funds or small cap like that, you can buy the mutual funds, right? So the fund manager indirectly invests in stocks only, correct? So while investing in mutual funds, you have to see the portfolio of that mutual fund where they are investing, like large cap, small cap, mid cap, or some kind of debt funds are they are investing in. So all those things you have to see before you buy the mutual funds, right?
Yes, sir.
So these are the timings. 9:15 to 3:30 is for our stock market. Currency is from 9 to 5 p.m. and commodity is from 9 to 12 p.m. Okay. So there are many traders who trade only in currency, and there are many traders who trade only in commodity as well. Okay, because they have a long time frame, right? So they want to trade starting from morning till night. Right. So how stocks are segregated? So these stocks are divided like types of stocks: large cap, mid cap, small cap, and penny stocks. So they are segregated based on the market capitalization. Right. So how you calculate the market cap? You calculate the market cap stock price into number of shares. I have shown you that free float of market cap, right? So those are the number of shares into stock price. So if you do this calculation, you will get the market capitalization. So for large cap, we consider this, if it is greater than 20,000 crores, we call it as a large cap stock. If it is between 5,000 to 20,000 crores, we call it as a mid cap, and likewise small cap and penny stock, we have to segregate based on the capitalization. So there is a normal rule. So this is like a normal rule of for a person how to invest. 50% should go in large cap, 25% in mid cap, 15% small cap, and 10% penny stock. So this is how you can invest. But if your risk appetite is more, you can change this percentage, because large cap they are having low risk. Large cap is low risk. Mid cap is having the moderate one, and small cap and penny stocks are high risk. Similarly, they are high risky, but they will give you more returns also, right?
Yes, sir.
These are low risky and they will give you less return. So based on your risk appetite, you can change this percentage. But this is the ideal scenario. 50%, 25, 15, and 20 is the ideal scenario. Okay. It's clear?
Yes, sir. Yeah.
Yeah. So dividend, any idea about dividends?
Yes, like dividends means the company's profit is being given to the shareholders.
Right. So there are many stocks which are giving dividend. You can also invest in dividend stocks. Right. Okay. Now there is a weightage. So any idea about the weightage? How the stocks are weightage in Nifty 50 and Bank Nifty?
No, Ankit, I have no idea about that.
So see, Nifty 50 is an index, right? So Nifty 50 is having a basket of stocks, right? So they have divided the certain weightage based on the market cap and based on the sales profit and all those things. So top is the Reliance Industries, so it is having around 10 to 11% of weightage in Nifty 50. Likewise, TCS, HDFC Bank, ICICI Bank. So these are the top 10 which are having the highest weightage in Nifty 50. Okay. Similarly, in Bank Nifty also there are certain stocks which are related to banks only and they are listed in Bank Nifty. So whenever these stocks move, likewise the index will also move. Okay. So the index is dependent on the stocks. So this is how there is a movement in index. Okay. Yes. Okay. Types of trading. So can you tell me the types of trading you know?
Like scalping means 30 to 40 minutes. Intraday trade means like you can buy and sell stocks within a day where the margin will be 5. Swing or positional trading means like within weeks or within days.
Right. So you can segregate into three categories: short, medium, and long term. Right, based on your thing. Right. Short term maybe like 7 to 10 days. Medium term like 1 to 3 months, and long term maybe like more than 3 months. And apart from that, there is a concept called investments. So these are basically for very very long term, right? Like for 2 years, 3 years, 5 years, and 10 years, something like that. Okay. So now you have to decide first which one you are interested to do it. Based on that, you have to plan. Scalping, intraday, and this thing. Scalping basically is done by the traders which are having a huge capital, right? So they normally do
Yes.
scalping because they have to exit within the time frame of 1 to 3 minutes maximum. They will stay in the trade and then they will exit. Either they have to book the profits or they have to book the losses. Right? So they are very quick. And then intraday, like you have to enter and exit in the same day within the 9:15 to 3:30. Okay.
Retail investors.
So mostly I want you to focus on this part: positional, short term, medium term, and long term. Right. I also maximum do this kind of trade. 70% I focus on swing only. Intraday is very less. Scalping is also very less. Like only 10% is scalping, 20% is intraday, and 70% I focus on swing and positional. Because this is the place wherein you can make a lot of money. Okay. But most of the retailers think that they can make the maximum money here, but no, they are wrong. Actually, you can make the maximum money here because apart from technical, you need to understand your psychology also. So trading psychology has three things basically: hope, fear, and greed. Okay, so these three things a trader should not do it, right? You have to follow your charts, technicals, and make an entry and make an exit. Okay, right? It's clear. Okay. So any idea about risk management?
Yes, uncle. Like risk management is like something like where like how much risk are we able to bear on that particular trade? Like how much money am I able to lose and how much money am I able to gain?
Right. So you have to plan. You have to plan your before entering a trade. You have to plan your risk. How much risk you are willing to take. It's like you can take 1:1, 1:2, 1:3. So it depends on you. So best is I would say you can use 1:2 risk reward ratio. So this is the best which I feel. Okay. So one is the risk. 1 rupee is the risk, and 2 rupees is
The loss.
reward. This is the reward. 2 rupees is the reward and 1 rupee is the risk means loss. Okay. So let's say you are planning based on your technicals, you have planned to take a profit of 10 rupees. Then your stop loss will be how much?
1:2.
5 rupees will be your risk and 10 rupees will be your profit. Right. 1:2.
Okay, understood.
Right. Understood now? 1:2. Like
Yes, understood.
So if your profit is 20, then how much should be your loss?
So like 1 divided by 2 into 20.
20 is your profit. So what will be your risk or your stop loss here based on 1:2?
By like 15.
10, right?
Okay.
10 rupees. So you have to divide like that. 10, 20 divided by
So
10, then you will get 1 by 2. 1 divided by 2. Right. So means 10 rupees loss you can take in that trade and 20 rupees profit you can take in that trade. Like this. So entry, target, stop loss, and trading stop loss. Any idea about trading stop loss?
no, uncle, I have no idea.
Okay. So some people, what they think is that they don't want to keep the stop loss. Let's say you make an entry at 100 rupees, okay, and your target is let's say 120. So now the stock has moved to 1110 and your stop loss here was how much? 90, right? Because here I am taking a 20 rupees profit, so I should take a loss of 10 rupees. Okay. So now the stock has moved to 110. So what you can do is that you can trade your stop loss from 90 to 100. You can change your trade means change your stop losses. Right.
Understood.
And as soon as the stock moves to 120, then also you can trade your stop loss to 110. So like that you can keep trading your stop losses, right? So no need to book targets or losses. You just keep on trailing the stop losses. Once it moves to 140, you can trail your stop loss to 120. So like that, you can keep on doing it. So once
as the stock price increases.
as the stock price increases, you have to follow it. This. Right. So this way, you won't lose your money also, and you will exit in profits. Let's say after 140, you have put the stop loss of 120. After that, the stock has started coming down. Then you have to exit at 120. So now you entered at 100 and you exited at 120. So you are in a profit of 20 rupees, right? So this is the benefit of trailing stop loss. You can keep trailing till the stock keeps on moving. You can keep trailing the stop losses. Okay. Fine. So these parameters you have to follow when you plan your trades. Or there is one more way to plan the risk, like 1% or 2% or 3%, like that. Also, you can plan your profits and losses. So, so it is up to you how you want to plan, right? Okay. So money management, there is one concept I just want to explain you. Money management, how to do the money management, right? So let's say you have a capital of 1 lakh. So you should not use 100% capital in trades. Okay. So you should always use in form of baskets, right? So in 1 lakh capital maximum you should use 70k. 30,000 should always be in your demat account. So that if you want to add some more quantities or if you want to average it, for that purpose you should keep this amount in your demat account. And even in 70k, you have to decide a basket. You should not put 70k in one stock, right? So because your capital is less, so how you can plan? You can plan like 10k in one stock. Okay. So here you can make a basket of 7 stocks. So like that you should do your money management. How to place your money in different stocks. You have to distribute your capital. You should not put all the capital in one stock. Right. It's clear?
Yes, Uncle. Yeah.
So now we have 3 types of trading analysis. We can do via charts and pattern, which is called as technical, and then we can do through fundamental while seeing some parameters, right? Any idea about parameters which can use for fundamentals?
Like, so like intrinsic value, and then PE ratio, PB ratio, those, Uncle.
Right. And even you can check the promoter holding and all those things based on
Promoter holding, market cap,
market cap.
PB into PE.
And then you can check the sales and revenue and all those things also based on the fundamentals, right? And then sentimental. Sentimental, any idea about sentimental? What is sentimental?
Only seeing the news and the newspaper hearing around.
Yeah. Yeah, and one more thing comes under sentimental, which is called as insider trading. Right? So this is not legal, but some people still do it. How they do it? They have some information before the news is coming to news or news channel or newspapers. They have some persons who will inform them about the news, and based on that they will trade. Right? So prior to the news coming to news channel and newspapers, they will finish their trades. So they are called as insider traders or insider trading. So this is not legal in India. Not legal. So we will mostly focus on technical, and somewhat I will explain you about fundamental also, and this we should not do it. So while taking our trades, we will not follow the news until and unless it's a big news, right? It's an event like RBI repo rate cut, or it's an election, or it's a war, something like that. Then apart from that, we will not follow any other news. Only the top events or top news only we will follow, right? Like war related things. And yesterday, as you mentioned, right, you were trading during election time. So those things you have to remember actually, and should avoid to trade on these days like election, RBI repo cut. On these events, try to avoid the trades. Okay. Okay. Any idea about MMI, Market Mood Index?
No.
Okay. So they are market mood index. Four market moods are there: extreme fear, greed, and extreme greed. Right. So there is a. So this is an index. I'll show you how to check this one second. So go to Google and type MMI index. So then you have to go to Ticker Tape. This is a website, Ticker Tape. So here you can check the market mood index. Okay. And so there are many traders who use this only for investing or long-term trading, right? So how they use it? So they use it. So they see whenever the market is coming near extreme free, they will start buying the stocks, and they will try to sell near this area between the greed and extreme greed, between this area, right? Because we expect that whenever there is an extreme greed parameter, the market may see some kind of correction, right? So this is a one index which you can check while you want to invest for long terms, or you want to do 6 months trading or 1 year trading, like that you can plan. Right? So always try to make an entry near extreme fear or here, like within this area.
So this will be changing every day, uncle. This one.
Yes. And try to exit near this area. This is the exit area, and this is the entry area. So in COVID, during COVID time, our market was here. So if you have invested at that time, you would have earned a good profits, because after that we have increased here till here. Even in October, like September 2024, the market was here. I saw that the market was here in September 2024 last year, and after that you have seen a correction, right? Around 17% of correction after that. So mostly we have seen that if you check the historical data, mostly the market, if it comes here, there will be a correction seen, right? And the correction always happen like this: 5%, 12%, 17%, 30%, 50%. The market mostly corrects in this scenario, in this ratio actually. First 5%, and then it will go to -12, -17, -30, and -50. So in COVID it was around -48%, I think. 45 to 48%. Right. So these things you should remember. Okay, this clear MMI index?
Yes, sir. This is clear.
Now we will start on the candles. These are things. So there are certain parameters. And again in 40 minutes. Okay.
Okay.
Okay, so there are two types of indicators: leading indicators and lagging indicators. Okay. Have you heard about it earlier?
No, uncle.
Okay. So we should always use the leading indicators, because lagging indicators will tell you the information about the price very late. By the time stock is already 10-15% up, then these indicators will show you that information. So we should always avoid using lagging indicators, should always use the leading indicators. Okay. So I will teach you some leading indicators which you can use during the trades. Okay. So charts, patterns, and indicators. Okay, clear? Any patterns you have used?
No, uncle. No, uncle. I haven't learned any of it.
So first we will start with candlestick. Okay. So what is a candlestick? What is a
Like, like it's a part of a stock which shows the movement of the price.
See, as you learn a new language, right, like English, French, or anything, right? Similarly, candlestick is also a language. Okay, candlestick is also a language, and which was developed by Japanese. Okay, so they used to use it. They are first used by Japanese. This candlestick. Okay, so they look like this. They are basically two colors candles. So in some software you will find green or red, and in some softwares you will find black or white. Okay, so there are two color candles. So mostly the green color will say that it's a bullish candle, and the red candle will say it's a bearish candle. Okay, so bullish candle means it is dominated
It
by
has potential.
buyers. It is dominated by buyers means it has more buyers as compared to sellers. So that is why we call it as a dominating candle, bullish dominating. The bearish candle means this is mostly dominated by the sellers. Okay, sellers and buyers. Okay. So whether it's a green candle or a red candle, it has four prices: high price, low price, open price, and close price. Correct. Similarly, in a red candle, the high price will remain here, low price will remain here. Only these two things will change. In bullish candle, the open price will be here, and in red candle, the open price will be here. And in here, the bullish candle, the close price will be here, and in bearish candle, close price will be here. So that is the only difference between bullish and bearish candle. Okay. Apart from that, the low and high prices will remain same. Okay. So this is called as upper wick. Upper wick, you can see right, this one, and this is lower wick. Lower. So any idea how these candles are formed? These spikes, how these spikes are formed?
Like, uncle, that when like if the open price goes more below, then the wick will be even more longer.
These are basically the sellers actually. Okay. If you see in a bullish candle, these are basically called as sellers, the stop wick, because when it started forming, the candle will look like this. Okay, and once they are sellers, this upper part will turn into wick, and the final candle will form like this. Okay, so in a bullish candle, you can say that these are the sellers at the top, and these are the, and what are these?
Buyers.
Buyers, right? Because they have pulled up the candle towards the upside, right? So the shape of the candle depends on the volume, correct? So four prices plus volume. So we have to focus on only these things: four prices and volume. Right? Again, if you go to bearish candle, these are the, who are these people? The top three.
These are sellers.
No, these are the buyers in the bearish candle. Here they are sellers, but in bearish candle, these are the buyers and these are the sellers. Right. It is ulta. In bearish candle, everything is ulta as compared to a bullish candle, right? So this is how a candle is formed. So based on the volume only, the shape of the candle. The volume is the only thing which decides the shape of the candle. Sometimes if you have seen the shape will be like this, right? Sometimes you have seen the candle shape like this. Sometimes you have seen like this, right? So there are many shapes. There are around 1000 shapes of the candle, 1000 plus. Okay. So volume is the main criteria who decides the shape of a candle. Okay. Understood? Any
Yes,
doubt?
I understood.
Any
No.
doubt? So we will talk about the first pattern, which is called as hammer. Any idea about hammer?
I've seen these, uncle.
No, you have seen, that is fine, but any idea about how to?
No.
So hammer is basically, we can think that you have seen a hammer at home, right? So it looks like this only, correct? So we have basically four types of hammer. One is like this. Other one can be like this. Okay. The third one can be like this. Ulta hammer. Okay. and fourth one can be like this. So these are the four shapes only of the hammer that we should trade. Apart from that, there could be many other hammers, but we have to trade only these four hammers. If we see these kind of hammers, then only we should trade. Otherwise, we should leave it. Okay. And this can be green color, green color or red color. That doesn't matter. The color doesn't matter in hammer. Only the shape matters in a hammer. Okay. The first point you should note that only the shape will matter in hammer. No color, whether it's a green or red, it doesn't matter, right? So this is the first point. Okay. Second point is we have to trade hammer only whenever there is a trend. Means whenever there is a uptrend or whenever there is a downtrend. At that time only we have to trade the hammer. I have explained you three types of market, right? Uptrend, downtrend, and sideways.
Sideways.
So in sideways, if a hammer is formed, then we will not trade. If a hammer is formed in uptrend, then we will trade. So in uptrend, there can be these one hammer can be formed out of these four, and in a downtrend also, this if a hammer is formed within this pattern, then only we will take a trade, right? So first is these shapes, second is trend, uptrend or downtrend.
Downtrend.
Right? So those two rules are clear.
Yes, sir. Understood.
Third rule is whenever there is an uptrend and a hammer is formed, what we have to do? We have to mark the high and low of that hammer. Based on that, we have to take the trade. If the next candle crosses the high, we have to take a buy trade. If the consecutive candle crosses the low, we will take a short trade or sell trade. This is how we have to take the trade, or we have to plan. So this is the rule of the hammer trade. Three rules you have to remember. So can you tell me the rules?
Like first, there are four types of hammer. One is the it'll be in the top, and then there'll be a line, and next one is like there'll be a full line and there'll be a hammer pattern. That one both in green and red. So the first rule is like we have to like trade only when the market goes in the uptrend or downtrend. If it goes in the uptrend, you should buy. If it goes in the downtrend, you should do short sell. And then the
not like that. First, we have to filter the trade when we have to trade. So we have to trade only when uptrend or downtrend. After that, we have to decide whether we have to buy or sell. Because there is a hammer is formed. I will explain you on chart also. Now I'm just explaining you the rules. I will show you in chart also. Okay. So in our uptrend, if a hammer is formed, we have to mark the high and low price of this hammer. We have seen the prices, right?
Yes.
So we have to mark the high and low prices, and based on that, we have to take the trade. If let's say after this hammer, there is one more candle formed, which is crossing the high of this hammer, then we have to take a buy trade here. And if it is crossing the low of the hammer, we have to take a sell trade. Okay, I will show you in chart, and then you will understand. So you can use Trading View to find the charts. You have the access to Trading View?
Not the paid version, uncle. Like
Free
I
version
use Screener.in.
No, that is based only. Use Trading View. You can use the free version of Trading View also. That is fine.
Okay.
Free version is. Or if you have a Zerodha access, you can use even in Zerodha also, right? They also have a good platform to use the charts. Okay. So let's say I want to Nifty. Okay, I'll show you Nifty. I'm using a daily time frame, so you can choose based on your type of trade, right? The time frame. Okay. So you can see hammers. This is hammer, right? So how we have to trade? We have seen the uptrend, right? There was an uptrend, 3-4 candles are there, and there is a hammer is formed, right? So now what we have to do? We have to mark the high and low of this hammer. Okay, and then we have to wait for the next candle to form. So whenever a next candle crosses the high or low, we have to plan the trades. So it can be the immediately next candle, or it can be to a second or third candle, right? So in this case, there was a third candle here, right? So once the third candle crossed the low price, we have to take a sell trade. Or if it crosses the high, we have to take a buy trade. I am normally a buyer, so I don't take a short trades. I normally take buy trades only. So I will not take any sell trades. I will always take buy trades. Okay. So you have to decide which trader are you. Are you a buyer or a seller? Based on that, you should plan your trades. Okay.
Uncle, like selling means
Sell you can do intraday. Intraday you can sell the stocks. Still if you are not holding it, then also you can sell it intraday.
that is called short selling, uncle. That
Short
was
selling, yes, short selling. But you can do only in intraday. But if you want to do positional, you have to use the future and options only. Positional short selling you can do only through future and options. Fine. So based on that you can plan. So see like this. So there is a hammer here, right? Inverted hammer, right? So there was a downtrend and then a hammer is formed, and then if the high price is crossed, then we will take a buy trade. So next day, the high price crossed on the next day, right? On this candle. So we have taken the buy trade here.
understood.
Understood? This clear? But see,
Yes.
you have to practice. Practice is very important. You have to practice these all patterns. Okay. Patterns you need to practice. Okay. Similarly, I'll show you some more. Because without practice, you may not be able to trade. See, this is a hammer, right? And then downtrend started. It crossed the low of this hammer, this candle, and then the downtrend started, right? So this was the day on which you have taken the trade. So this was the election day, June 2024. Right. Because there was a hammer formed on the previous day, and then once it crossed the low, you can take a short trade here, short sell. Again, there is a hammer here, right? See, first you have to see the trend, and after that, if a hammer is formed, wait for high and low, and then you can take the trades accordingly. Okay. Similarly, if you see a downtrend and a hammer is formed, then again you have to follow the same thing. You have to mark the high and low prices of the hammer, and then based on that you have to take the trade. But but what I have seen is that whenever there is a downtrend and a hammer is formed, mostly 90% chances are the market will go upside. Okay. So the hammer is also called as trend reversal pattern. Okay, we call it as a trend reversal pattern also. Fine, this is clear.
Yes, uncle. Clear.
So you understood this rule and this pattern?
Yes, uncle. I understood.
Okay. So now you can try to practice it, and then we'll see. So, how did you like the class today? How was it? Did you like it, or was it boring, or how was it interesting?
No. It was not boring, uncle. It went well.
Okay. So see, whatever I am teaching you, you have to practice. Without practice, you won't be able to follow
Like
it.
practice means like in form of what, uncle? Like how should I do it?
You start doing in stocks. Let's say, so normally which stock you trade? Can you tell me any name of the stock?
Uncle, right now I'm into this one, Tata Motors. From past 1 year, Tata Motors is not doing good. So that one.
Tata Motors, right? Okay. There is a hammer, and then after that, a uptrend started. The hammer. See, these are not 100% patterns, right? But the accuracy will be around 60 to 70% of them. Okay. That means if you are taking 10 trades, 6 and 7 trades will give you profit, 3 or 4 trades will give you loss. But if you are using 1:2 ratio, you will be in profit only. So since the Tata Motor is all the times coming down, you can plan to take a small trades in this. Okay. See here. अभी आता है रिस्क मैनेजमेंट. हमको रिस्क मैनेजमेंट कैसे देखना होता है, राइट? तो रिस्क मैनेजमेंट, right, you have to wait for this area to cross, and then there will be a trend reversal, and it can go till here. So like this, you have to try to find the stocks and try to find that pattern and try to trade. Maybe you can trade in less quantities, right? 2 or 3 or 4 quantities like that. Trade in small quantities only, and once you have hands on, then you can increase your capital slowly. Right. So this is one of the stock. Apart from that, you can check any other stock, HDFC Bank. See, there was a hammer here, and then after that, uptrend started. Right. So try to find those stocks which has a hammer in that. Okay.
Okay, understood.
So maybe you can practice it, and then we can have next class. Maybe we'll see tomorrow or day after tomorrow. I'll let you know when we'll have the next class. Okay. Meanwhile, you can try to practice. Any other questions you want to ask?
Like, yes, uncle. Like when you said those 52 high and 52 low, uncle. So, like example, there is a stock called XYZ. So the highest in the among the 52, only that price will be taken, or like how does that work, uncle?
See, 52-week high means all-time high. The system will automatically tell you the all-time high price. Last 1 year high.
So among the 52 weeks, which day was it high and at what price?
Yes. So see here in this case, as you can see that here it is showing 52-week high on 26th of June, means today only, right? So in last 1 year, starting from today, if you go to the back date, right, starting from today till last 1 year, it made a high of 2008, and which was made today. So this was last 1 year high.
Okay, understood.
And 52-week low means last 1 year low. So last 1 year low it made on 24th of July.
So tick size means it can move only by 10 paise and 20 paise only.
Yes.
So it can. So the tick size can also change. It can be 0.5, 0.5 also, like
Stock wise, stock wise it can be different. Like in HDFC Bank it is 0.1. Let's say in some of the small cap it may be different. Let's say here it is 0.01. Right? It is 0.01 in this stock. Okay. Okay, this is clear?
Yes, sir. Clear.
Any other questions you want to ask?
No.
Okay. So you can share me your email ID, then I will share the recording, this recording, and then you can use it for reference. Okay.
Okay. I'll send.
Fine. And so here I have selected the 1 day time frame. Let's check on 1 day time frame. Okay. So for hammer, what was the first rule? Do you remember? So first we have to check the trend. Okay.
So like, oh, okay, uncle, like teach.
You take notes now, otherwise you will forget.
No, uncle, I remember like hammer is also known as trend reversal with key. That
Yes. So first you have to check the trend, right? Whether it's an uptrend,
Uptrend or
downtrend,
downtrend.
sideways, right? See, there are three trends now: uptrend, okay, uptrend, downtrend, and sideways, right? So I have explained you all the trends, right? All the three trends I explained you, right?
Yes, sir.
So hammer we have to trade in only in uptrend and downtrend. In sideways we will not trade hammer. Okay. So this point is clear now.
Yes, yeah. This one is clear.
So I think it's better you take down the notes because otherwise you may forget, right? So just note down the steps. Okay. We have to trade hammer only in uptrend and downtrend. Okay. And sideways we will not do anything.
Yes, uncle.
Okay. So trend, you know how to find the trend, right? See.
Yes, uncle. That one.
Either the stock has to move like this in uptrend, right? So there are two. Basically, there are two types of uptrends. One is like the stock will keep on moving continuously, right? And the other one is it will try to make higher high and higher low. Okay, like this. Higher high and higher low means, let's say it started at 50, it will go till 80, and then it will give a correction till 70 or 65, and then again it will start up move. So likewise, it will go on like this, right? Higher high and higher low. So the tops are called as higher high and the bottoms are called as higher low, correct? Similarly, in a downtrend, either the stock will continually start going down, right? Or how it will move?
Like,
Lower high and lower low, like this. So this is lower low, lower high, right? So this is a trend actually, how to find the uptrend and downtrend. So this is how you can check in charts, right? So now you have to see the trend first. Before you find a hammer, you have to see the trend, right? So now, as you can see that, we'll check on the historical data, right? So here you can see that there was a downside and we can see a hammer here and multiple hammers here also, right? So many hammers are formed. So you have to trade the first hammer. So once there is a trend is ending here because we have a hammer formed here, right? So this is a inverted hammer, right? Inverted hammer. Fine. First you have to find the trend, then you have to find the hammer, where the hammer is actually formed. Now what you have to do? You have to mark the high and low of the hammer. Okay. So let's mark it, the high price and low price of the hammer, right? So this is a hammer and I have marked the high and low price of this candle, right? So now I have to wait for the next candle to cross the price, whether it crosses the high or the low of the hammer. Based on that, we have to plan the trade. Let's say second or the third candle crosses the high, then we have to take a buy trade. Okay, so high price was how much? 1932, correct? Low price is 1912, right? So based on the movement of the stock, we have to plan our trades. So if it crosses 1932, then we would have taken a buy trade. So here you can see that once you take a buy trade, then it will start moving and your stop loss will be the low of this hammer. So this will be a stop loss, right? The low price of that hammer, which was 1912, correct? And what will be your target? You have any idea about previous swing high and previous swing low?
no, uncle, I have no idea.
Okay. So previous swing high, you can find out the previous resistance, right? Because you have taken a buy position. So previous resistance is, this is the first resistance and this is the resistance, right? Because why we are calling it as resistance? Because the stock came down.
Resistance and support, uncle.
Yes.
Okay. Now I understand.
So this was a resistance, right? So we can call it as a previous swing high also. The resistance we can call it as a previous swing high also.
Okay.
And support we can call it as a previous swing low or support. So our stop loss will be the low of this candle, and our target will be the previous resistance, which is this area. Right? Means it is around 1995 somewhere, 1995, right? So we took an entry around 1932, and our target is 1995, and stop loss is 1912. So 20 rupees is the stop loss, and 60 rupees is the target. So that means 1:3, right? Is it clear or any doubt in this?
Yes, uncle. No. Clear.
Clear, right? So this is how you have to first find the trend and then hammer. So here also you can see that there was a trend reversal, and then you can see a hammer here, right? This is a hammer. So now you have to wait for the trade, because the other candle didn't cross the high and low of the hammer, right, yet. See, it is not important that only the next candle can cross. It can be like multiple candles can go in this range also, right? Maybe 4 days, 3 days, 7 days, 10 days, like that, right? So maybe the candles can go in this ways, maybe sideways market is called sideways, right? It is going into sideways. But we have to wait for the candle to cross either the high or low, then only we will take the trade. We have to wait till the time it doesn't cross the prices. Okay. Find this clear hammer, trend, reversal
Yes.
hammer, both high and low, right?
Understood.
Understood? Any doubt?
No, uncle. There's no doubt.
So have you used this hammer earlier?
Like me, while buying a stock, I won't really refer this graph because I won't really understand this. I refer line graph only.
But line graph, how you will refer that? How you will understand the line graph? Okay, let me find. How you will check here?
So like
support and resistance. Only support resistance.
that's all. Yes, uncle. Only support and resistance.
So for you, this is a resistance, right? And this is a support, correct?
Yes, uncle. That's.
And okay, just explain me now. The stock is coming down. Now, what you are going to do in this?
Now I have to wait till 1920. Like in case if I have to I didn't put my money. I'm just seeing the stock. So right now it is at the peak. So in case if I have to enter, I'll at least try and wait till 1920 or 1930.
No.
Around that thing.
No. See, this is also a previous resistance. This is also a previous resistance. So previous resistance will become support. Once it crosses the price, the previous resistance will become support. So now this is a support area for the stock. These are the support areas. The stock may not come 1922 now. You mean, do you understand the HDFC Bank is a top bank, right? And now it is at
Yes.
2000 rupees. So you are expecting 80 rupees correction in this stock. Means you are expecting 4% correction, correct? So logically, do you think it will happen?
No.
No, right? So you have to see the previous. You have to now see the support. So this is the support. This I agree, but prior to that, there are multiple supports as well, like this area. Okay. This area is also a support. If you see the line chart, because this was the resistance, previous resistance, right? So now since the stock has already crossed this area, now this price will become support, because the stock has already crossed this area, right? So now if you get near this area, right, 1970 or 1975, then you can buy it.
Yes, uncle.
Based on the line chart. Okay. But but if you are using line chart, the accuracy is very less. Accuracy is very bad actually in line chart.
Yes.
So you should not use line chart. Okay. So you just forget about line chart. Just focus on candlestick only. Okay. Just focus on candlestick. So, but you should practice it to learn how to identify the hammer. Until you are able to identify it, you won't be able to take the trades. Okay, you should start learning and start identifying the hammers. Correct. Okay. So now you can see that once the hammer high is crossed, then only you will take a buy trade, or else you will wait. Right. Second condition is, as you can see that this was the previous resistance, right? Right.
Yes, uncle.
No, just tell me if you have any doubt. I'll explain you again.
No doubt, no doubt.
Okay. Okay. So this is the. So do you agree with me? This was the previous resistance area.
Yes, uncle.
These two, right? So now the stock has given a breakout here, right? So do you understand breakout?
Yes, uncle. Break out and break in. Those two are different terms. No?
Breakout and breakdown.
Yes, breakdown.
Breakout and breakdown. So breakout will be shown with a green.
It will go up and break down and go down.
Yes. So the breakout will go up and the confirmation is a green candle, a big green candle, right?
Marubozu.
Marubozu, green Marubozu. And in case of downtrend, the candle will be of
red color.
The big red candle towards the down, the stock will go down, right? So in this case, as you can see that there was a previous resistance 1, resistance 2, and here the stock has given a breakout. See, it crossed the previous resistance, means it gave a breakout here, right? So after giving a breakout, it is trying to retest this resistance. This is a retest. So do you understand retest?
I don't know really much about this, uncle, but I just heard it. That's all.
Okay. So once there is a breakout or breakdown, after that the stock always comes for a retest. So this was a breakout and now stock has come for a retest. So if you are a risky trader, you can buy here also. But if you are a safe trader, then you have to wait for the hammer candle to cross the high price, then only you should buy it. Okay. So first learn the hammer and then you can use it, and then you can use breakout on top of hammer.
Understood.
Right. So the basic traders will wait for the hammer to cross the high price, and the traders who are experienced, they will buy here because it's a retest, right? And stop loss will be here only, because we will buy here because my stop loss is only how much, 5 or 10 rupees only stop loss here, right? So that's the reason. But safe traders and the new traders should wait for this hammer to cross the high price and then you will buy it, right? So you understood two use cases here. One use case is related to hammer. Second use case is related to the retest, breakout retest, right?
Using support and resistance.
And third use case will be for the safest trader. What he has to do? He has to wait to cross.
He has to wait till after the hammer, which pattern forms.
No, the third one. The third use case is you have to wait for the high price to close, which is 2027, the high of this candle.
Okay.
So there are three types of traders. Three types of traders you will see in this scenario. First trader will wait for the hammer to cross the high price and then he will take the trade. Second trader will buy here only because this is a retest. And third type of trader will wait for the high to cross the price, 2027. Right? So there is a different way to see the candles, right? I have shown you three ways to see this candle. There are only 2 or 3 candles here, right? But the perspective of each trader is different. The first trader will choose the hammer, second trader will choose the retest, and third trader will choose the all-time high, right? So you have to choose as per your psychology and as per your convenience. You have to choose which use case you want to enter. Understood or any doubt?
No, understood.
Because I am thinking that you are feeling some doubt. That is why I am asking again.
No, uncle. This one, stop loss is 1:3, no, uncle.
See, stop loss also there are 2 ways to use it. Either you can do in terms of percentage, right? Or you can do based on the candles. Fine. So first use case is hammer. So in that case, your stop loss will be the low of this hammer, which is 2000.
2001.
Right. So your entry will be where? Here, the high of the candle, which is around 2015, right?
Yes, uncle.
So once it crosses, you will take an entry near 2015. In that case, your stop loss will be around 2000, which is how much? 15
15
rupees, right?
rupees.
So now you have to plan your target, because here the stock is all-time high. You cannot see the previous resistance here, right? Because this is all-time high. So based on this 15 rupees, you have to plan your target, maybe like 1:2 or 1:3. Understood first use case, how to use the stop
Yes,
loss?
yes, uncle, understood.
Target, right? And second use case is you will take an entry here only, wherever there is a retest.
2001.
Now only, which is 2001, right? So here your stop loss will be the low of the hammer, which is around 1992 somewhere, which is very near, right? Around 9 rupees or 8 rupees. And in this case, your target should be 2026. This this line, the green line, right?
Yes,
The
yes.
high, the high which it made previously. So your stop loss is 8 rupees and target here is how much? 24 rupees. Almost 1:3 you are getting, right? Understood second use case?
Yes, yes, uncle, understood.
And third use case is when it crosses this high, which is 2026. So once it crosses 2026, then you will take the trade. So in that case, your entry will be around 2026. And what will be your stop loss?
Like 1:3, uncle, that one.
See, in this case, your stop loss has to be here only, near this
Like
area.
2001 and 2026 is my entry.
2026 is your entry, but in this case,
2001.
your stop loss will be around 2001. Or there is one more way. What you can do is that this is the high and low of this candle, big candle, right? How much? Low. How much is the low? 1990, right?
1995.
And high is how much?
2026.
So what you can do is that you can add and make a half of this to get the stop loss. So this is one more way. 2026 plus 1995 divided by 2. So half of this candle, basically. Half of this candle you can keep your stop loss. Because in such cases of breakout, our stop loss will be very big. That is why we are taking half of this candle.
Okay, uncle, understood.
Because this candle is very big, right? So that is why we are taking half. So there are two ways. Either you can take half of the candle, or if you have more risk appetite, you can take the full candle as your stop.
Okay, uncle.
So my thing is that I will take entry here only. I will take entry around 2031.
Okay. In case, like,
sometimes the stock they will try to manipulate, right? The high is 2027, so I will take some buffer and then I will make an entry. I'll take some buffer. So I will take an entry after 2031 only. Until then, I will not do it actually, right? So these things you can think which method suits you. Based on that, you can plan your trade, right? Okay, clear?
yes, uncle.
So now let's see one more shot. Now tell me the hammer. Like, can you tell me for this how we will take the trade in this area?
So first I had to mark the support and the resistance.
Okay. So which area is support and which area is resistance?
Support is 1661. No.
Yeah.
That is one support, and one more support is 1750.
Yeah, right. So this is
Yes,
one, right?
so then one more resistance is 1825,
Correct.
and one more is between 1750 and 1725, somewhere around that.
No, actually is fine because you have to consider this only because there are multiple candles, right? So this is the only one
Yes,
supporting
yes.
something on this resistance, right? So if you have to take an entry here, then how you will take the entry? Because we have hammer and different candles here, right?
So, okay, like
I have three candles here, right?
all three hammer, uncle.
Not the hammer actually.
No,
This is a different candle called doji actually. So that
Doji. Okay, okay.
But
I
all the
remember
three,
those.
but all the three are doji candles only, right? So how you will plan your
Yes,
trade
yes.
in this case? Because there are three candles here.
Like the higher price and the lower price, add and divide by 2, then what is that? I'll keep the stop loss.
So first tell me entry, where you will take the entry. After entry only you will think about stop loss. Now don't think stop loss first. First think about where you will take the entry. Based on that you have to plan your stop loss and targets.
I'll take entry at somewhere around 1750 or somewhere below that only, uncle.
What do you
If
have
the
to
stock
consider?
goes,
See, this is the area actually. This is the zone now for you because there are three candles. So you have to take the highest price of the three candles and the lowest price of the three candles. Based on that, you have to plan your trade, right? There are three candles, right? So you have to take the highest. So how much is the highest of the three? This is high is 1779, and this high is 1782. So once it crosses 1782, then only you have to take a buy trade, right?
yes, uncle.
And try to add some buffer, maybe not 1728, maybe 1785. Just add some buffer point also, 1785. So once it crosses 1875, then only you will enter, right?
Understood.
Okay, so you have to take the highest price of the three candles. If in case there are five candles, then you have to take the highest price among the five candles.
5 candles. Okay.
Right. So this will be your entry, and your stop loss will be here or half. You can take half of this area. Right. This is the area, right? Half of this area or 19 or 1735. 1735 will be very far, right? Because you are taking entry at 1785. 50 rupees is very large stop loss, so you can take half.
Okay, uncle.
Half of this region, right? And then your exit point will be near here, this area, not here. This is the top. You should enter, exit here,
Okay, okay.
because you have to understand the candle psychology also. See, this wick means they are sellers. Whatever wicks you can see, the top ones, they are all sellers because it's a green candle and they are all sellers. So you should not wait here. You should book your profits near this area. Whatever price the previous candle closed, at that price you have to exit, right? Which is around 1815 something. So your entry is 1785. Your exit is how much? Profit how much you are getting? 30 points, right? So in this scenario, your stop loss should not be greater than 30 points, right? Either 15 points or 30 points maximum. Because you are earning only 30 points, you can't keep a stop loss of more than 30 points, correct?
Yes, yes.
So
Then my capital will get affected.
yeah. So that is why either you have to consider 15 points or max to max you can take 30 points stop loss. Right.
So in case if I, this one, risk to reward ratio is 1:2. In case if I make 30 rupees, I'm ready to sacrifice 15 rupees.
Yes. So that is 1:2. But here I don't think 15 points will work because it's a very huge thing. So you have to consider 30 points only.
Okay.
Or the second thing you can do is that you can leave this trade because you are seeing the stop loss is high. You can skip this trade or if you want like that. Normally I'll check the stop loss and target the difference. If it is more, then I will skip that trade. I will try to find some other stop. Right. So that way also you can think. Fine, this is clear?
Yes,
Hammer?
uncle. Understood.
Okay. So you have to practice, huh? So you can practice it and then you will understand more. Try to see more and more charts. Try to see charts. Try to take some trades during trading time, maybe one quantity or two quantity, and see how it is working, right? Because if you want to see intraday, you want to practice, you can take 15 minutes chart and practice in intraday also. Okay. You can check practice in intraday also, right? You can see so many candles are there, right? Kind of hammers, small candles, right? Here you can see hammers, right? So you have to practice, then only it is going to work for you, else it will not work. People will come and say that, sir, it is not working, it is not working. If you don't practice, it will not work for you. You have to practice and put it in your brain, then only it will work.
Okay.
Fine, clear?
So, like, yes, uncle. One doubt, uncle. Like, in case, like, you said, like, in case, like, why can't we take trading stop loss over here? So, it's more advantage, uncle. In case we have a trading stop loss. No,
Trailing
in
stop
the,
loss.
yes, uncle, that one.
Trailing stop
Because
loss you
in,
can use.
I can, okay, uncle.
I don't use trailing stop loss. You can use it. I don't use stop loss actually, but you have to use it. See, it depends on your capital. Your capital is less, so that is why you have to use the stop loss. My capital is more, so I don't use stop loss. Uh, whenever I need money, at that time I will book losses. Maybe like after 3 months or 6 months, at that time I will book all the losses in one go. So I don't keep small stop losses like this. Right? So I'll wait for 3 months, 6 months. Even some stop losses I will book after 1 year also. Right. So if your capital is less, you have to keep booking the profits as well as losses. Otherwise, your capital will go, right? So my trading strategy is different. I don't book losses. I will just book profits, and at the end of financial year in March, I will book losses, all the losses. So I will carry forward all the losses till March. Okay, so but since your capital is less, you should not do this. You should try to focus on stop losses only. Right?
Uncle, why not we trade indexes, uncle? Because indexes are more predictable, no? Indexes.
See, indexes, there is a lot of manipulation going on, right? Because see, what is your aim? You want to earn profits, right?
Not more than earning profits, like to fully understand the markets, only understand the markets, just the markets.
If you want to understand, you can, but you have to learn future and options. Now, future and options is a
Very risky, I know.
it is very advanced and it requires at least 5 to 10 years of experience if you want to trade in future and options. First you should learn stocks, and then only you can learn future and options. It is not like that. See, I have seen many people who are jumping directly to future options. It's of no use. You can't make money if you are directly jumping to future and options. If you cannot handle the stock, how you will handle index? Index is very highly volatile, right? So it's very difficult. And in future and options, you require a lot of capital. One lot you cannot play, right? Slowly it will
100
take.
shares.
Slowly it will take all your capital. If you have 10,000 rupees, slowly it will take your whole capital. I will explain you one use case. One of my student, she took classes on stocks only, right? She learned about the stocks, but after learning, I told her that don't do future options. But still, after the classes, she started doing future options. So she lost 1 lakh rupees in future options. Now she left even trading. Now she is not doing even the stocks. So that is why don't do future option. You will feel like it is very easy, but actually when you go and execute it now, it will take all your money. So future option psychology is different. The stock psychology is different. So first you focus on stocks, try to experience some 2 to 3 years, 4 years, right? And then slowly you can do future options later. And there are so many strategies, so many things to learn in future options. It is not that easy, right? You have to learn the premium, you have to learn the expiries, right? Weekly expiry, monthly expiry, option chain, India VIX, volatility index. So many things are there, right? In that. So it's not that easy. I do future options, but I do only on expiry days. Mostly, I will do only the stocks. See, my aim is to earn profit, right? Whether I earn from index or from stocks, it doesn't matter, right? See, in fusion options, it is very easy to lose the capital. Stocks, it is very difficult to lose the capital. If you are able to find a good stock, the trending stock, then you will definitely earn profits with that. So that is the problem of the trader. They are running behind future options. It's no point to run behind that, right? Learn stocks and do it first. Gain some experience, 2 to 3 years. After this, start doing future options. Right? See, you can apply technical analysis also future and options. 30 to 40% technicals will work